Hey everyone, welcome back to my channel. It's Nasdaq with Arshia, back with another video. Today we're going to be talking about the jobs report and how it disappointed the Wall Street. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's get into it. So here are the details first. The Labor Department delivered its monthly jobs report at 8:30 a.m. ET Friday, which is today, 8:30 this morning. Here, these are the main metrics. So change in non-farm payrolls were actually 235,000 versus 733,000 expected, and a revised plus 1.053 million in July, which is really bad. So unemployment rate in August was 5.2% versus 5.2% expected, so that was good, and 5.4% in July. Average hourly earnings month over month was 0.6% versus 0.3% expected and 4.4% in, sorry, 4%, just 4% in July. So that was a pretty big disappointment for Wall Street. And let's read on with our articles today to support this. So following back to back of months of non-farm payroll gains of more than 900,000, employers added back the fewest jobs since January. Still, this marked the 8th consecutive month of net job growth and brought total employment closer to pre-pandemic levels. The unemployment rate also dipped further to reach a pandemic-era low of 5.2%, while holding above the 50-year low of 3.5% from early 2020. So unemployment and if you go to the 2020 graph, 2019, 2020, January, 3.6%, February, March, 4.4%, and it just keeps going up till the highest was in April 2020, 14.7%. Now it has fallen down to about 5.2%, 5.4%. So yes, that's a huge improvement, but we were expecting a bit more, and that's really slower than we thought. So forecasts for the report are wide-ranging from about 300,000 to 1 million. Federal Reserve Chairman Jerome Powell has emphasized the need for more strong jobs data before the central bank would start to unwind its massive bond buying program. And the disappointing report could change expectations about when the Fed will start its tapering process. So this can affect the Fed's plans also very, very badly. So a surprisingly low jobs number this morning clouds the tapering outlook considerably, as only 235,000 jobs were added in August, likely giving the Fed pause and pushing out their plans to announce their bond taper plans. So many people believe that the Fed would announce their taper plans at this month's FOMC meeting, and that's no longer likely. And these are not my opinions. This is the person who was writing this, but I do agree with it though. Earlier, whatever Jerome Powell said, he said he'll start the tapering plans because everything looked good, but now it doesn't look so good, and so they'll just pause it and they won't announce the FOMC meeting. So August's total, the worst since January, comes with heightened fears of the pandemic and the impact that rising COVID cases could have on what has been a mostly robust recovery. The weak report could cloud policy for the Federal Reserve, which is weighing whether to pull back on some of the massive stimulus that has been adding since the outbreak in early 2020. The labor market recovery hit the brakes this month with a dramatic showdown in all industries, says Daniel Zhao, senior economist at job site Glassdoor. Ultimately, the Delta variant wave is a harsh reminder that the pandemic is still in the driver's seat and it controls our economic future. That is very true. So basically, we cannot forget that the Delta variant is still there, and it will determine our economic future. And also, it had a dramatic showdown, the labor market, and this could show that the Fed thinks we're not ready for the next steps to recover the economy. So if we look at the Dow Jones, it fell by 100 points. So it started off at 35,401.77 and 73 cents, sorry, and it drops down to 35,292.50 cents, sorry. I don't know why I keep saying point. So it drops down by about 108 points, which is really, really bad. But it spikes back up, and now it's at pretty much the same, $35,378.46. And the S&P 500 is down by about 4.89 points. The NASDAQ composite is actually up by 15.5 points. The Russell index is down 9.83 points, and the NYSE Arca oil index is down by 4.47 points. All in all, it's not been a really good day for the stock market. So in conclusion, my opinion is that if this continues to happen, then I don't think the Fed will likely start tapering their plans and pulling back some of the stimulus check. So in conclusion, I hope you guys enjoyed this video. If you found this information helpful, please be sure to like, comment, subscribe. If you made it to the end of this video, if you're one of those lovely, beautiful people, thank you so much. Please be sure to comment powder puff below, and that's also your cue to subscribe. Thank you guys, and see you in the next video. Bye.